So, Keir, how are you?
I'm very well, thanks, Chris. Very
Good
well.
stuff. We are very excited to have you on tonight. Obviously, Shawbrook have been our partners for the last 12 months and have been supporting many developers, landlords, and investors in our platform, which is why, to be honest, I was so overwhelmed to see the response that we had. I mean, only 2 weeks ago, we had Terry on, and then we've had you on, and the amount of registrations for this webinar just goes to show how much people really do like Shawbrook and like working with you guys. And I think the sort of topic of conversation that I walked away from Terry is that it's really more of a relationship business and nurturing those relationships and understanding how people operate to really provide them with the best service, which we'll get into in just a minute. Obviously, there's no better person to speak to than the relationship director for Shawbrook.
Yeah.
But what I really want to do is I want to lean on and sort of really get to grips with your experience because you've been in the industry for about 25 years now, and there's
Yeah.
a lot of changes, a lot of things that have happened over that time. And I'd really like to sort of understand a little bit more about that from your perspective and sort of go right back to the beginning and find out sort of where it all started, how you ended up in this industry and how you are now sitting with us today.
Cool. Thank you. Um, right. Before I came on here, I was talking to my wife about this, and she asked me what I was doing tonight. So I was going having a talk or whatever, presentation, a talk, and she said, "Oh, you'll be okay then." I said, "Yeah, I'll probably be okay because I can talk a bit too much. So if I go off piste a little bit, please do tell me." But thanks very much. Firstly, thank you very much for inviting us on. I feel like it's a little bit after the Lord Mayor's show, after having Terry on here a little bit, but you're absolutely right. I think Terry's perspective will be maybe slightly different to mine in that I'm one of the key members of the team working with clients directly. I think from an experience point of view, yeah. I mean, look, I've been in financial services for 31 years. I started in Lloyd's. I started as a cashier, did everything at Lloyd's for 5 or 6 years, got into mortgages around about 27 years ago. I worked for various different lenders doing from a mortgage perspective, but critically sales. So I worked as a BDM for many years for many of the mortgage lenders. Went through the first major issue within my career was the credit crunch, which feels like a lifetime ago, and actually people remind me that it is because people I come into my team now. Some of them were about 9 years old, 10 years old when that happened. So we had quite a lot of changes from there. But I got into mortgages at that point. I went through until 2008. There was quite significant issues in the marketplace at that particular time. Found myself wanting to move out of mortgages and moving slightly more into a specialist area. I did bridging for a couple of years before figuring out that development finance was the right thing for me. So I came and worked for Aldermore Bank, so one of our competitors, 2014, and I've done basically I've funded probably 170, 200 different developments from 2014 onwards. Most recently coming to and working here Shawbrook, where I got taken on to originate with customers, but also I manage a team which has fairly recently expanded slightly as well. So I've got 5 people that work underneath me, essentially originating and managing customer relationships.
So you said 172 projects.
I would say, yeah, roughly. I'm trying to think. I think it's about 170 to 200 ish.
Right. I've got to ask this question. In a former life, I was an estate agent, and it still drives my partner round the bend to this day when we're driving through our local town and I go, I sold that one, I listed that one, I sold that one. Do you have a similar experience in terms of the ones that you funded?
With my kids and my wife.
Yeah. Yeah.
Right. So we'll go and we'll be driving somewhere and I'll say, "Oh yeah, I did that one," or "I did that." My kids will tell me, "Yeah, you told us that like 6 months ago, Dad." Or I said, "But I didn't tell you about that one, did I?" But yeah, that's the fun of it, right? I mean, that's the in terms of actually enjoying the job and doing the job. That's the fun of it. We're building something, we're creating something, and
Mm.
it's some, it's a legacy for developers, and it's housing for generations, and it's a massive issue, housing in this country. I think we don't need to go into that in too much detail, but yeah, you're right. I'm certainly, I have to say, I'm pretty proud of being part of that.
Yeah, I genuinely think that's the reason why people love property so much because it's
Yeah.
quantifiable in bricks and mortar to what you've done and what you can actually see the projects that you've worked on. Um, Keir, you mentioned about the 2008 crash, and we've not really had a guest on before that's actually mentioned working through that, particularly in financial services. And I'm going to be honest, one of my favorite films is The Big Short. I watch it on repeat, and then walk away thinking that I'm some sort of economic expert just from getting a grip of the film. But what I'd love to know from your perspective, what was it like working in 2008 when that happened? And was it as much of a catastrophe as it seemed to the outside world? Because we've got a lot of noise going on property wise of the market's not doing so well, or the media likes to play that there's problems with the property industry right now, but from our perspective, when you're working at the coalface, it doesn't seem that bad. So in 2008, did it have that same level of sort of danger?
I think it's a really interesting question, and I've seen that film as well. I think, look, I was working in mortgages at the time. I think if I look at what I felt and how it was at the time, and then with kind of a retrospective lens, looking at things like that and seeing those sorts of things, and then learning more, as you get a little bit older, etc. I was relatively young at that particular time, so for me it was, my job was sales, straightforward, going, seeing as many people as possible, selling as much as possible, and that changed pretty immediately because there was a massive appetite, and then it just was restricted. And I think the biggest thing that everyone had a concern about was, where's the money coming from? Right? I think that seemed to me to be the biggest concern at the time. And personally, look, I went through, I think, three or four different. I stayed with HBOS at the time, and I went through three or four restructures at the time, and so I had to apply for my job, and again and again. My wife was pregnant with our second child at the time, so it was all pretty stressful, as you can imagine. But would I? From my perspective, it was actually a very positive experience because it, again, like anything, it taught a little bit of resilience going in, and realizing that. I always took the view that people need lending, people need mortgages, people need houses, and I think that's only it's only the situation of housing in this country has only got worse since then. So therefore, there is a need for people in finance, developers, etc. But yeah, I think the things I've learned is subsequently have been quite interesting around what actually happened more on the corporate banking side, which I wasn't a part of at that time.
So you mentioned sort of resilience, and the sort of need for housing has always been the same, if not greater than it is now, than it always has been. But I wonder from a specialist lending perspective, over that sort of career, what have you seen change? What sort of the most notable differences from when you started your career to now?
I think, well, look, I think if I look at specifically for development, so I came in 2014. So by that particular point, the market had recovered somewhat, although it took several years in terms of price. Prices, particularly with developers, because I think from that point onwards, certainly up to, although there's been dips, obviously, with various things, certainly up to about 2022, 23, which I think is probably a critical time for a lot of modern developers since the crash for me. I think what we were seeing was relative stability in terms of cost. Interest rates were, static and particularly low, so funding costs were low. More and more entrants came into the market. um, it was slightly easier to develop at that particular point in the way that the market would support. So with a lot of developers, if they went over time and over budget, they could have been, they never really necessarily got themselves into a hole at that time because the market sort of supported them almost in a way with property prices going up. So I think that was an interesting period. I mean, there was a lot of things that went up and down, Brexit, COVID particularly, until we got to, I think, the Ukraine war. And I think that was quite a critical point for everybody, particularly with inflation, cost inflation, and of course, interest rates, being significantly going up. And when we're talking about going up, we're talking about, 40 to 50% interest spikes basically on debt that was accruing all the time. So I don't know if that answers your question a little bit.
Yeah, absolutely. But I think the one thing I'd sort of take away from it is that lending is always consistent. It's the variables that change. And I know
Absolutely.
that sounds a bit of a wishy-washy statement, but really, there's a lot always going to be things that change and that move. But the consistent thing is that the housing is a need, and that there will always be funds available to make that happen.
Yeah, I think so. And I think, look, but the reality, even though I say, that was obviously quite a challenging time, particularly 2022, 23. I think, look, most lenders' criteria generally hasn't changed if they've been at the sort of size of as ourselves. There's been little tweaks here and there, maybe a little bit of haircut and reduction in leverage, but generally speaking, it's been relatively consistent. And ultimately, banks like ourselves and other funders, we've got money to lend, right? So we need to get it out. We need to circulate it, get it back in, and development is a very, very good vehicle for that for banks. Very good.
Awesome. So, sorry to raise the question, but I think it's quite important for maybe some of the developers that are coming into the industry that don't necessarily have much experience working with a lender. What is a relationship director? What does that mean, and what do you do sort of in your day to day?
Right. Okay. So I mean, like my role is very. There's lots of little different parts, and you can put it into a CV. You can say this, that, and the other. But the reality for me is I'm here to bring business in for the bank. So I'm here to lend money on behalf of the bank to the right sort of person and hopefully get it back. It really is. It really is as simple as that, and then everything else falls underneath it. So my particular role is that. The relationship side of it. Look, I think when everyone looks at it, it is a sales role, but fundamentally, I 100% believe that I want to work with people that I like and I believe and I trust, and I think we're going to get our money back from basically. And from a relationship perspective, it isn't something then that it isn't something that we just go, look, okay, here's a quick sale, we can move on, etc., etc., etc. I've done that for many, many years before coming into development finance. The relationship for us is we don't do, I say 170, 200 loans, but I'm heavily, from a relationship perspective, I'm heavily discussing with clients and their lives, what's going on with their various developments throughout, and it's about knowing that person, understanding what they want, and actually delivering for that person as well. So we'll talk to a lot of people, and I'll speak to a heck of a lot of clients or opportunities that come to me, and I'll go, we're not the right bank for you to start off with. So what I want is, I don't want to be lending money to somebody that I think, well, fund's going to go wrong, but they're not, we're lending the money where it's not the right product, it's not the right fit, and there are many people that Shawbrook doesn't necessarily fit with, and I'm sure we will come out onto that with bridging, etc.
Yeah, absolutely. I think it's quite interesting, sort of from a specialist lender's perspective, is that traditionally in banking, it would always be, and I'm going back many years ago, you would go and see your bank manager and you would actually have a cup of tea with them and explain what it is that you're trying to do. And you would build a relationship and a rapport there. And then over a long period of time, there would be sort of a regular exchange. But that hasn't gone away from specialist lending because that's still more important. It's not a case of entering a few details into a website and hoping that you get, something back. There needs to be a relationship built there to understand what's going on.
And it's both sides. It's
Yeah.
absolutely both sides. I mean, look, I'm lucky. I have Shawbrook. I have a banner behind me, except all of the stuff that I can talk to clients about. Where the money comes from. How good we are with getting it out, and all of the things. But ultimately, they need to buy in. Clients need to buy into me, and I need to buy into them. And we need to be able to have, a relationship by definition is that give and take both give and take both sides, and being open and honest with each other. And there's plenty of clients that we've had that there's been some rocky patches. I'm sure that we let's not be naive about it. You can't whilst we paint a lovely picture of developments for our credit team to get approvals, they and us both know that something may go wrong somewhere down the line. But it's how we then deal with it, because ultimately our view is we lose money unless we build that out when we complete it. So how are we going to do that? And I'm sure there'll be some questions you've got around that because it's on the agenda.
Yeah, absolutely. I mean, it strikes me as such a multifaceted role: sales, account management, risk management. Yeah, there's a lot going on. But we've got four core areas that we're going to sort of touch on today or
Sure.
this evening, and I'm going to sort of ask you a couple of questions from each, and hopefully that will really help sort of our audience understand how you guys operate and some of the experience that you've had over the sort of last 12, 18 months with what developers are doing. But guys, if you've got any questions, do please put them in the chat. And I know, Donna, you've submitted a question to me, so we'll get around to that as quickly as possible. So the key areas are sort of refurb, convert, or rebuild, day one to draw down, the credit decision, and when the build slips. So I'm going to take it step by step, and the first one. And one
Sure.
of the most important questions that I hear quite a lot is what is the difference between a bridging loan and development finance? When does bridging stop, and when does development finance start?
Right. I think that, look, a lot of this is to do with size,
Mm.
first of all, but I think the two key areas for me are, but when you're looking at bridging and you're doing work to a property, is okay, what is the level of work that's being done? How long is it going to take? So what's the level of work? How long is it going to take in terms of an estimation? And what are the costs like? Because from a bridging perspective, a majority, and I'm sure there's refurb bridges, there's everything left, right, and center that you can get out there. But generally speaking, you're getting a loan at the beginning, and then your cash would then support the refurbing or converting or whatever you're doing on the
Mm.
property. I look at it and think it's really, if you've got a project that's going to be, at least the work's going to take at least 6 months. The build costs are going to be at least probably 300 to 500,000. Then that's when you need to start to think about development finance. The other thing as well is what you're looking to do. So if you're looking at the old days of a quick flip, and the TV programs, I'm sure we're all aware of Homes Under the Hammer or whatever it may be, and you've got the liquidity to buy it and say get 70% leverage on it, and then spend 50 grand or whatever it is to refurbishing it, doing all the things you need to do, and then flipping it and selling it, or even if you want to retain it, that's a bridging deal. That's the reality. The other thing with development finance is that for us, the minimum development loans start at £1 million. So it's unlikely that flips and things like that are going to. I mean, unless you're flipping a large house that's in London somewhere, and you're doing a little bit of refurbishment, etc., or a flat refurbishment somewhere in central London or something, that your loan is necessarily going to be bigger than that if you're looking at a flip. So I think flip time scales and costs are particularly critical. The other thing, of course, is particularly with costs, is that development finance lenders require monitoring surveyors to come out and bring the cash flow through. So the developer does the work, QSIMS comes out, reports back to the bank, says, look, yeah, the costs have been X, and you can now send out 50,000, £100,000 to your client. So the minute you've got those sorts of things, that's when you should be looking at development finance.
That's really interesting. So it's not a case of that, it's more a product based on the scale of the size of the project as opposed
100%.
to sort of the specifications of the project. Because I always wondered whether there was like maybe a change of use, or it was something more structural that needed doing, that could tip it from a bridging loan to development
I mean,
finance.
most, yeah. I mean, look, I would say, from percentage-wise, most of our development schemes are going to be new build, which needs planning, and it's obviously structural, and you're building from ground up, etc. However, there are also a lot of permitted development rights schemes that we do, and again, that's development finance. So
Great stuff.
you're right. The scale, absolutely critical.
Brilliant. Um, could you walk us through a deal from like the first call to first drawdown? Like we did
Generic.
something similar on a previous webinar, and it was really really interesting to understand the process from a developer's perspective of actually finding a site or being interested in a plot, and then actually taking it from that first conversation with you guys to actually, funds are on the way.
There's a lot. There's a lot. I think, look, the types of inquiries we get can come in from, here's a couple of lines. We want to do this because we've got web access, we've got all sorts of different ways that, advertising, etc., that people can come to us, brokers, etc. So really, it starts with the inquiry. I always look at something and try and get the bare bones of something that comes to me, whether it's directly from a client. Obviously, we have brokers, etc. So the basic details that I need to look at to see whether it's something that we can do, whether we would be interested in it, and also, as I say, whether we would be the right fit for the client. So it starts with that from that initial inquiry. It could be verbal, it could be an email, it could be absolutely anything. But I just need sort of 3 or 4 key points to understand, okay, what are you actually doing? Are you buying something? Does it have planning? What are the costs likely to be? And by that I mean, what build costs, contingency, if there's any professional fees, sales section 106, anything like that can be given to me. And then what's ultimately, what's the end value, and then what is the exit plan? I think when I started in development finance, I would say probably 90% of the deals that we were doing at that time were sales. And again, it kind of follows the model that I mentioned earlier, where developers are coming in and prices would continue to rise and everything was fairly good, so you could take your profits out, etc. But as time has gone on, and sometimes the market's a bit slower, you have other opportunities to do development exit products, or more commonly now, holding and retaining like a small block of flats, or retaining longer term, which Shawbrook also does, by the way, which is another reason why people can come to us and want to use us. So yeah, I mean, those are the key things that we need to find out, and then that first thing gives me the numbers in my head. Okay, so what are we looking at? How much can we lend? On how much does a client need to put in? Of course, there are other very, very important things that come through as well. And if those things are volunteered to me early on, then it helps me to go, look, can we take this to a further stage? But at least from that perspective, we've got some numbers on the numbers. We can say, look, this is roughly what it's going to look like in terms of cost. Experience is always going to be the critical driver when you're looking at somebody doing development finance. Always. It's very, very rare that we would do a development for somebody who's never done development finance, never done a development before. So it does sometimes, wind a few people up. Sometimes if they come to us and say, "Oh, you're a specialist bank and everything else, and we're looking to do our first development," and you go, "I'd love to fund you, but I can't do this until you've done a couple. How do I start?" And that's sometimes a bit of a problem in the market. But there are, again, other lenders who choose to do that. And I actually think for those developers, a lot of the time, starting at the right point. Sometimes we'll have people that come to us and say, right, first development, I want to build 10 houses. And you're like, okay, sounds great, because they may have inherited something. It could be anything, they've had, and they've got, great idea to make money, etc., which it is a great idea to make money. But unless they've got the right professionals around them, it's not easy. It's not easy. I was with a developer today, actually, and we were talking about all the things that can go right and wrong with developments, and it's not for everybody.
That's so interesting. I've never heard it sort of explained so transparently like that, in terms of that if you haven't done a development before, that's probably you're not the right lender for you guys. And why I find that so interesting is that I don't think sort of in wider business circles we talk enough about what our risk appetite is, or what who at the core of our market is, and who it is that we service, and why we service them well. Because there will be lenders that are out there that specifically nurture those first time developers that have got, their first sort of break into development. But in terms of what you guys are focusing on, you are supporting maybe more experienced or seasoned developers in probably in a much more technical way, and overseeing such bigger
Yeah,
projects.
yeah, and I think that's a very, very good point. And I think, it's not, we have a policy to go on. We lend quite a significant amount of money, and quite large, some pretty large projects. So, it isn't easy to support those. I mean, sometimes I'd like it and go, yeah, I'd love to do that, but at this particular, juncture, it's not something that we do. But that, as you rightly point out, there are funders out there who will do that and support people, and
Yeah.
their books will be a lot smaller than ours. So their risk will be in this, and they'll have a risk in completely different businesses, if you like, separate to the development finance.
I think this would be a good time to touch on the question that Donna sent in, actually, because it was relating to experience, and she
Sure.
asked how you evaluate experience for smaller or first-time developers, and will you require experienced project manager, main contractor?
Yeah, I think, look, as I said to you, from a first time developer, we're likely to not fund them. That said, there are circumstances where, if we have particular, contractors is a great example. Anyone who's involved in the contracting or running their own business of contracting, then we know they can build a house, right? Because we can see evidence of it from and building from other people. So I do take the view that as long as everything else stacks up, then we should look to support those parties. That's very, very different for themselves. But if somebody's not involved in the industry at all, we don't see it as strong enough mitigation that you have a professional team and you have a contractor and you have a project manager that sits running the contract between the parties. For us, we just don't see that as a strong enough mitigant, because at the end of the day, we're going to ask for personal guarantees from that party, and if they haven't done it before, that and something happens to that project manager, the contractor can just run away with, saying it would, but it represents a risk that we really don't want to take.
Yeah, and I really, really appreciate the transparency on that. I think it's really, really useful, especially out in the market as the way it is at the moment. One of the things I've always been fascinated about, and it's probably because I've worked for I worked for a brief period for a bridging and development finance broker, and I was in the marketing team, so I didn't get involved in any of the sort of exciting stuff. But I always wondered how the drawdowns work in practice. Is it a phone call from Shawbrook, one of the lovely team there, that just says, "Yeah, the money's on the way"? How does it work? I'd love to know.
Yeah, I mean, look, so obviously through the I don't want to go too much from a process, but obviously the inquiry side, we then go through to credit, we go through valuations, we do IMS reports, and if anyone has questions about that, please ask them, and go through to legal due diligence and complete the deal, and then go into life. So from and throughout the journey, that I will be speaking to a customer or emailing them, multiple times about various different things that we need to, and trying to make sure that they get the property, or we refinance, we get to that completion stage. We then hand over to our sort of portfolio managers who then work with the relationship managers as well, to meet the client personally. It's very, very critical that the clients do meet us. And I haven't even mentioned any of this on the, because there's so much you can talk about here, right? But it's critical that we meet the clients, all the parties involved, the contractor, etc., so they know, right? So I'm responsible for it, and also our portfolio manager is responsible for those payments. Essentially, what happens for us is that we would typically have an IMS going out on a monthly basis, agreeing with the client, when they come out, come to site, provide a report back to the bank about what the costs that have been expended on the site, including professional fees. Sometimes there might be advance payments. So for if we've got enough for cash flow, the client's enough cash flow, which is obviously fairly common nowadays. There might be some timber frames, some steels, some kitchens, etc. We all try and agree all of that up front, and then a report comes back to us, and we'd normally expect to review that within 24 hours and then make payment directly out to the client. We send them a utilization request, which is all done on DocuSign. So they know who they are, and they know who the portfolio manager is. They're contactable. The emails are there. Phone numbers are there. If there's any particular problems with a report, we go, look, we haven't had this insurance or whatever. The IMS doesn't get in contact with us. So then we'll go straight to the client and ask them. The last thing we want to do is delay payments. So there's also, obviously there's going to be situations in reports. Sometimes you haven't got everything you want. Okay, that's fine. We still feel like we can, as long as we've got the insurance on this, there's nothing, the contractual risk hasn't expired. Then fine, we'll make the payment out and just request that whatever needs to be done is done before the next drawdown. So it's I would say it's simple. It isn't that simple, but that's basically the process. And from our perspective, the last thing we want is to be starving cash flow for a development. So it's critical. The turnaround times for that report to come back to us, absolutely critical, particularly when it comes to the end of the month. Always, subcontractors need to get paid, etc., and we don't want them walking off site. Clearly,
no, absolutely not. And from a developer's perspective, what do you see that the sort of biggest cause of delay is on their side in terms of making that drawdown a lot smoother?
I think sometimes there's things that just get forgotten about, and it can be little silly things like the PI is expired from an architect or something like that, or we're still waiting for they've started the development. We know there's some pre-commencement conditions still outstanding, but we know that they haven't given us an update on them. Things like that, just silly little things like that, or they haven't provided I don't know, the latest update from the NUBA warranty or building regs or whatever. It tends to be things like that. And again, it tends to be things like you go, okay, well, it's not horrendous. Let's just make the payment out, and we will speak to the client and say, please, you need to just get this done next time. I mean, admin, unfortunately for everybody, especially with all the new regulations that come in for developers, is can be a massive headache. So if you've got developers who are amazing at building, but also amazing at admin and dealing with all the regulations, then that's a winning team, and that's someone that we'd love to fund.
Awesome, guys. We're getting close to the hour mark, so I've got a couple more questions for Keir, but I would love to put some more of your questions forward. So if you do have any, please do drop them in the chat, and we'll get round to them ASAP. So let's talk more specifically about the sort of credit decision and obviously applying for funding. In terms of the developers that come forward, what are some of the mistakes that get made in the application process? What are the things that you see come up time and time again that ultimately refuse an application when actually it could be quite a simple fix?
Yeah, I mean, I don't think I've ever had something that I think it's just making sure we've got the right client, also client, their circumstances are right for us, because there'll be many times where, for example, I don't know, speaking as someone in banking, adverse credit and previous liquidations and things like that. If there's anything like that, then we may be able to do something with it, but we'd like to know about it up front. So if we do a searches and we have issues there, and it becomes quite apparent that it's not something that we can, it's not a party that we can lend to, then that's always good to have that up front. Brokers in particular don't necessarily ask those questions of clients. I always tend to ask them and say, look, we need to do these things quite, so if there is anything, let us know. Because I don't want to waste their time. Not just, it's my time and it's their time, and then make sure they go to the right lender. So I don't think there's very many situations where it does happen that we go to credit and we haven't had all the information, or something comes out and out of the wash, that we say no to. But it does occasionally happen.
But that was my next question, was like, what's the problem that you can work with during the credit decision, that maybe, had someone been a little bit more upfront about it, you can work with it. But I guess it's that level of transparency from your perspective. You're going out there being really transparent. First of all, you've got to have experience.
Yeah.
Second of all, you've got to know what you're doing and have some level of competency around the site that you're dealing with. So
Yeah.
if you're being that transparent, ultimately they've got to share that information with you, regardless of what's gone on in the past and what sort of lies. So I guess that you've kind of answered that question in terms of, if it's a problem, it needs to be shared early on, and then you can deal with it.
Yeah, absolutely. And there's policy exceptions, and there's some that, we hear it straight off. Then it's like, is this something that we feel we can do? And it's also, as you say, transparency and honesty and things are, I always say to our credit team, we're going to do something. I believe in this client. I believe they're going to do a good job here. Otherwise I wouldn't be lending them the bank's money. And I think if there's things that don't come out, I personally, it does grind with me a little bit occasionally, and I just go, look, this just, because I think it just means that people are hiding things, and that's not great. That's not great, because ultimately, if there then become issues within development, which happens at times, you then have go, is there something else? It's something else that, and it gives you that lack of trust, which it has to be there for both sides, not just me and the bank, but the client needs to have the trust in us as well. So I have to be, I have to be transparent and open at all times. I am.
Awesome. Well, before I go to Chris's question, because he's also asked quite a technical question, and I want to sort of give it the full length of answer it deserves. I'm going to ask you one last final question, a bit of a fun one to wrap up on. What's your favorite project or site developer that you've worked with recently?
Oh, recently or over time? Over time.
Over time. Let's go over time. Yeah, let's not
Right.
keep it.
Okay. I think my favorite one was a really cool site. Really cool site, because we get stuff that are fairly vanilla and fairly bland, and then we get some really interesting ones. The coolest one I ever did was an old lock keeper's cottage, very within, I don't know, like a mile of the Olympic Stadium. And it was cool because it posed so many problems for us to do the deal in the first place. You have rights of way access. You had to deal with a canal river trust around various things. So I'll never forget the amount of extra due diligence. And it wasn't the biggest of deals, but and the precautions we had to have for the CR, the canal river. It was so complicated, and it was a really cool scheme. Really cool. I mean, the house and the flats were there. The clients did a really good job of it, made money on it. The costs were quite complicated, so we had to extend it through the life, but the clients were good as gold. And that was probably about, I don't know, 9-10 years ago, but it always sticks in my head. It was what's my favorite scheme, and it wasn't the biggest one. It wasn't the most money I'd lend or to hit my target or anything like that. It was just the complexity that goes. And when we got it, and when we actually delivered it and got it over the line in the first place, that was, it was such a big, yeah, brilliant. We finally done this. And then when the product came out, absolutely brilliant product. So that's the one that sticks with me.
So just talk me through the development. There was a lock keeper's cottage there, and what how did it sort of?
So on the land, it was almost like it's like an island, basically, like an island. So you had to get to it, you had to access it, you had to get the materials in from canal barges onto it. You had to deal with various elements of access rights with the Canal River Trust, and it was a conversion there and a new build element next to it as well. So I guess it was probably three houses there, so it was split into to two. There was a new build house and there were two flats as well. So it was like 5 units, but it was just super cool, super cool.
Well done, Keir. You've outed yourself as loving the more complicated cases than the than the straightforward ones.
I think so. Why not?
Brilliant. Right, we'll go to Chris's question, and then Donna sent in another question. Guys, if you do have any more, please do put them in the chat, and we'll try and get round to them as quickly as possible. So, Chris has asked, how do they view as a lender build costs for an experienced developer when they are lower than the MSBCI costs when the developer is the contractor? And do you
Sure.
include sales presumptions in modelling to reduce interest
So
increase
there's a
day one
right.
funds?
So there's a few questions there. I've got a few. I think
Um,
the first thing I would say is how do we deal with how do we deal with the costs, right? So there's a matrix obviously that IMS is, and everyone will go to say what does BCIS say is the typical build rate for this, and then there's high, there's medium, there's low. So there is still, just because something says it's in the middle doesn't mean you can't build for lower than that. The question that everybody needs to get comfortable with is how can you build lower than that. So it's just about justifying that. So if it's the materials are being held, they're being ordered from a certain country, or the labor is a particular part of the country, or you've been doing this for very, very many years, so you've got control of your staffing costs or your prelim costs and all that sort of stuff, and you can justify it. And more importantly, you've done this before. Again, it comes back to doing this before. Have you done this before with another lender? So you've then got a question of, if you've done it before with another lender, we'd love to have you as a customer. Who was your IMS at that particular point? Because they're also, it's basically a referee, or for us that says, well, okay, this person has been able to build at this cost, and as long as you have that, that is really, really helpful. So can it be done? Yes. What I would say though is contingency levels are absolutely critical. So if it's a first-time customer for us and they're, on the lower rung of the BCIS, and particularly when they want higher leverage, then we're going to ask for 10% contingency. Typically, we wouldn't take a 5% contingency on that, and that's our view.
Keir, I'm so glad you got to grips with that question and
There was another
handled it
part
so
though, Chris.
brilliantly, because I was reading through that, and as I was reading it, I was like, oh, I don't know what I'm talking about.
That's
So,
fine.
brilliant question, Chris. And
There was another part to it though, Chris, at the bottom. I can't remember what it was. Sorry.
yeah, so do you include sales presumptions in modeling to reduce interest, increase day one funds?
Good question. Yes. So every lender does something differently. We have a whole lot of different models that we use. The reality for this is we are going to be guided by a valuer and valuation. So if you've got, I don't know, whatever it may be, 20 houses, and we're building them all out, are you finishing them all at the same time? Are you selling them throughout? Have we got a build program that's over 18 months, and you start building and you finish some of them at month 9, month 10? How are you marketing them? And what assumptions can we do? So we can do all sorts of different things. We need to be relatively conservative about it, because if we gear very, very highly, so the worst thing that can happen here from Chris is if we get the cost wrong, timelines go on massively, and we don't sell the units, or there's massive delays. Instead of us being 65%, we could be 75%, 80%, and that can actually happen, and that's the last thing that we want to do. And so we will be, I would say, moderately conservative on how we do that. But I'm very, very open to speaking to developers, particularly if I've done lots of different sites before and they've faced things. I'm very happy to take a view on that. And that will reduce the interest, and that will increase the day one advance, which I guess is what Chris is kind of getting at.
Great. Yeah. I mean, Chris, thank you for your question. Really appreciate it. I think if you're open to it, I can send Keir your details after the webinar, and maybe you can have a little bit more of an in-depth chat about it. Donna's come back with a second question, and very very grateful, Donna. Thank you. You always ask amazing questions. What key milestones must be achieved to trigger subsequent funding seamlessly?
Ooh. So i.e. the drawdowns after completion.
Yeah.
I mean, what should happen and what really happens are two different things, as I kind of touched on a little bit earlier on. I mean, look, I think depending on the size of deals, things like, and I won't go into too much detail here, but things like collateral warranties. You know, if you are a developer and you have a third party contractor, you know, that's delivering for you, we'd like to see that JCT formally in place before any of the development costs go out. We do appreciate there will be professional fees and SIL and anything like that could go out, and new build warranties and things like that, which we can pay. That's all absolutely fine. But the JCT, and particularly the insurance, the contractors all risk insurance, I would say I really want that done. Things like collateral warranties themselves depend on the size of the project. So, for example, for us, we don't have collateral warranties if the build costs are below £5 million. So, for the smaller to medium-sized projects, you don't need them, but they do need doing. And then where you get to a point with this sort of stuff is, okay, we got a shopping list of things that need to be done. You know, do we want to stop a developer who's started on site and getting on with things? Do we want to starve that of cash flow because we haven't dealt with a collateral warranty and got a final thing? My answer would be no, we don't. But we do need to sort of push that a little bit. Unfortunately, with things, you do sometimes get situations where these things don't get sorted for 5-6 months because our friends, the lawyers, or the insurance companies, don't talk to each other quickly enough to get them resolved. We will be funding those people, I can assure you. So I don't know if that answers the question, but I mean, we will take a pragmatic view on this stuff because we have to.
Brilliant. We're going to end on a final question. And before I do, Keir, where can people reach out to you if they want to get in touch? How can they work with Shawbrook?
So all our details are available, obviously, on our website. I can share, if Chris, if you want to share my details, you've got my email address, my phone number, etc. Please feel free to do so. Email, phone. I'm very old school. Email, phone are the best ways of getting us. And just, you know, if there is something you want to have a chat with us about, even if it's not me, it might be one of my colleagues in one of the different areas. Then, you know, of the country, then one of my other colleagues can do it. And by the way, we do lend everywhere in all areas of the country. As you can probably tell, I'm from London, the southeast, but we've got people in Scotland, the northwest, northeast, Midlands, southwest, everywhere.
Brilliant. Yeah, Scotland's a big deal. I was discussing that with Terry last week because I'm half Scottish, so it was yeah, it was brilliant to see you guys expanding up there and doing so much work up there.
We did loads there. We expanded properly in there last year, and the guys up there had a very, you know, for us, a very, very successful year, and some really, really interesting projects that we're funding, including houses on the 18th at St Andrews, I think. So there's some really cool, really, really cool stuff that we're doing in Scotland.
Brilliant. Keir, I'm going to ask you one final question, which is, we'd like to get a bit of a diary of CEO on this sort of on this webinar. We're not quite a podcast, but
Sure.
I asked this question a couple of weeks ago to a couple of guests, and it got such a good response. I think I'm going to make this a bit of a regular thing. 25 years in specialist lending. What is the best advice anyone's given you, and that you still think about to this day?
Oh my gosh. That's a hard one. If
Sorry,
I
I didn't
take
want to throw you under the bus like that, but
I'm okay. If I take an advice from anyone, I
so my
think
my
I
my
have.
my, my one is that there's a quote from Joe Malone who does the candles and the perfume. Very successful retailer. Her one is never make a decision on a bad day, and I always think about that at least once a day when like if something's going wrong. So is there a quote or is there a bit of advice that you hold on to right throughout your career?
The only thing that comes to mind, if I'm honest on this, is completely when we did all the sales things, and I was probably, it must have been 23, 24 years ago that I went to go and see one of one of those sales things, and the guy, the two things that I specifically remember about this, and this was in Birmingham, and there was this American guy, and he said, whenever I'm having a bad day, I just tap my outside pocket, tap my outside pocket, and you know why? Because I got basically a rolled up bunch of $50 notes in there. So even if I'm having a bad day, I have that cash there in my pocket, and it stays in my pocket all the time. And I know that might be a weird one, but that's just stuck through me all the time. So whenever you're having a bad day, just go whatever it is, that keeps you sort of grounded and focused. And for him, it was money. And he also said, remember what car you drove up here, because when you come back in 10 years' time, what car are you driving in that period as well? So it's not really advice. It was more of an anecdote for me. It's about how you deal with adversity.
There's a real positive message with gratitude with that. I love that. It's about being thankful for what you've got, regardless of what's being thrown at you.
Well, you could look at it that way, but you could also say the American guy's like, yeah, I got a load of wedge of cash in my pocket. It depends how you look at it. But yeah,
Yeah,
yeah, yeah. I get it. I get it.
yeah. So trying to decipher the nuance with our American cousins is probably yeah a little bit of a step too far. But there we go. Keir, it's been an absolute pleasure on tonight to have you on tonight, and I've literally only scratched the surface with a couple of questions
Thank you.
that I had written down. So I'm sure you'll be back before the year is out to come and share with us some more of your knowledge and experience, and probably I'd like to delve deeper into some of the projects that you've been working on more recently as well. We were talking off camera about a very exciting site that you're working on at the moment. So guys, yeah, Patricia, if you do want to watch back the first half, and if you want to share this webinar, it will be available to watch free of charge in the UK Homes Network app in our on-demand webinars tab, and you can also watch it on YouTube as well from tomorrow. So please do make sure you check that out and share it with your colleagues. Please do make sure you download the UK Homes Network app, because Shawbrook and Keir's colleagues are all in there talking about what they're up to, and you can drop them a message with any questions that you might have not been able to ask on tonight's webinar. We will be back in 2 weeks' time with another webinar. We've got many guests lined up for the last part of the year, some huge names that we'll be bringing on. So I hope you will join us for that. Keir, once again, thank you so much. Really, really appreciate it.
Thank you, Chris. Thanks for having me. Thanks, everyone. Cheers.
Great stuff. Have a great night, everyone. Take care.
Bye bye.